Hey, welcome back to another video. Today we're going to talk a little bit about alternative investments and where I'm thinking about placing my capital, because there's a big bubble out there. All right, we're seeing it with the retail frenzy. This retail frenzy hasn't really been talked about as much, but I'm seeing signs of it. So we'll talk about that today. And then the first thing I wanted to get into is just some things that I've been learning from. By the way, this is my Audible library here. A couple of the books that I'm listening to right now: Free to Choose, Tap Dancing to Work, Millionaire Mind, Market Wizards, Property Investing book. This one is really good. I read this one a long time ago, but wanted to revisit it because I'm getting closer to a home buying decision. But we'll talk about that a little bit in this video. But the Millionaire Mind. So two things that I really picked up from this book. Well, three things. One, that a lot of the millionaires and decamillionaires, one of the biggest characteristics that they cite is their persistence. Number two is that one of their biggest investments was in their own business, okay, or in other words, in their own income producing potential. So they didn't make all their money by making really risky investments, or in other words, the source of their wealth was not their investments. The source of their wealth was creating income for themselves. And number three is that if you look at millionaires versus decamillionaires versus high income producing non-millionaires, one thing that you see as you go towards the decamillionaire category is more risk-taking, calculated risk-taking behavior when it comes to investments. So you do have to take on some level of risk when it comes to building your wealth and investing, but you don't want to take on undue risk. So let's go ahead and get into the topic of the day, which is, will the market crash today? Where to put your money? Okay, so right here I've got PE ratios are expanding. So let's go ahead and go into this. We see since the beginning of the pandemic, we see PE ratios are kind of going sky high, right? They're going to the moon. We see S&P 500 earnings. I'm going to go into that in a different slide. We see that the dividend yields are crashing. Okay, that's typically what stocks are supposed to be valued on, based on the earnings and based on the dividend yields. We go over here to Y charts. Earnings are just starting to recover to pre-pandemic levels. We see that December 2019, they were at 139 here for the S&P 500 earnings. They started to downtrend when COVID started to hit over in China. They started to downtrend, and after January, they've been trending back up, as well as inflation. So we'll talk a little bit about that later. But what we're seeing is a big retail frenzy because of the payment for order flow, or in other words, the quote-unquote free trading apps, which they're not actually free. What they do is they'll charge a little fee, and that's how they make their money. So we see down here, U.S. brokers made $2.9 billion in 2020 by charging amateur investors commissions up front, basically by tacking it onto the price of the stock. So we see, let me go over here. We see that there's a very large boom in retail trading. Okay, so over here I've got 27.9 billion is what retail investors put into the market. So that's the most since 2014, I believe. So it's getting a little bit out of hand. Okay, 10 million new investors signed up for the free trading apps like Robinhood in the first half of 2021. So the question becomes, where do you put your money? So I'm going to go down all of these asset classes here, and we're going to just talk about them a little bit, and I'm going to tell you guys where I'm putting my money. So let's go start with bonds / peer-to-peer lending. So basically, bonds / peer-to-peer lending, both of those are giving loans to someone. So bonds could be giving loans to a company, could be giving loans to a municipality, a government, federal government, a foreign government. Basically, it's just giving out a loan. Peer-to-peer lending is the same thing, except it's just you giving a loan to somebody else. Could be through Lending Club, where you can buy part of a loan. You can buy $25 of a loan, but it's basically a fixed rate of interest, right? So that rate of interest doesn't change with inflation. That rate of interest just stays the same. So how that works is, however much you put in, you're looking to get a certain yield back, but if inflation heats up, you're essentially losing purchasing power on your dollar. So that one I'm not so excited about right now. It could be a good, I don't know, if you don't think that inflation is going to heat up, depending on the rate of interest that you're getting, that could be a decent option for you. It's a lot more stable, a little bit quote unquote safer, depending on who you're lending to. But that is the traditional safe option. I'm not really interested in that right now because inflation is heating up. Oil prices are hitting all-time highs. I believe it's 7-year highs right now with the OPEC situation that's going on. Look up the OPEC situation. That's one to watch this week. Gold. Okay, so gold. Thing that I like about gold, and I'll bump gold and crypto together, is that gold is not necessarily a way to get rich; it's a way to stay rich. Okay, so basically, it's supposed to. It has a track record of tracking inflation. So if we do see inflation take off, gold should also keep pace with it. So it'll help you preserve your wealth. One thing that is not necessarily great about that is if you're at the beginning of your wealth building journey and you don't have as much to really preserve, it's not super necessary for you to go into gold. It might be better for you to go up here and to your own business, right? Start generating that income. Because at the end of the day, no matter what people will try to sell you on, you have to generate a large income to have a large net worth. And there's no reason why you can't do that. Okay, cash. I'm not going to get too much into that. It's pretty much garbage. We see what's happening with inflation. Inflation numbers are much higher than they've been in any recent history. So crypto, we just kind of went into that. I think that crypto, if we look at basically what deca millionaires, what actual millionaires do, when you read their story, you don't see that the way that they got rich was they went into a very speculative investment. You don't see that they walked into a casino and bet it all on black. You don't see that they won the lottery. You don't see that they were gambling. It seems like when people are buying it, they're not trying to stay rich. They're not trying to invest. They're trying to get rich, right? So I don't know if I like where the market's at right now, so I kind of pulled out my crypto. But I'm still in stable coins, which we'll get into later in the video. So real estate / Airbnb. It's almost getting to the point where in the real estate market where you kind of have to Airbnb certain homes because the prices are so high. So basically with Airbnb, you can collect a higher level of rents, so you can force a little bit more cash flow there. So I'm looking at potentially doing Airbnb with a new place. But real estate, I like it because you can control basically what you buy at, right? The markets are inefficient. You don't have a market maker. You're actually negotiating the deal. So that's somewhere where you can actually find some deals, especially depending on where you're at within the country and things of that nature. So that's one that I'm heavily looking at. We'll put an X next to that, looking at that. Stocks / mutual funds. The reason why I'm looking into that is because of the tax savings that I can see through my company's, the TSP, the government-sponsored 401k, essentially. So I'm looking into that right now because I'm just looking for the tax savings, right? And looking for that Roth TSP where I can park some money over there. So stable coins, also looking into that. Right now, they're actually on BlockFi. They've been taking the rates down. So based on the crypto market, they've been taking the rates down. Risk with the stable coins, though, is that they are backed by essentially all of these other things. Okay, they're backed by stocks. They're backed by other crypto. So as the crypto market starts to go down, we will see those interest rates go down. We will potentially see certain stable coins start to crash or go away because they're not backed by anything if crypto does crash. So stable coins is basically you're buying into the crypto market indirectly. So I'm not super hot on those right now, but I am still looking into the stable coins just because I do see them as a little bit safer than these other things. So stable coins, I'm backing off a little bit from those, but mostly focus on real estate, mutual funds. Okay. Commodities, not too hot on those right now. Commodities could be something like, pork, or it could be something like rice, or it could be beans, soybeans, things like that. I don't feel like I really need to go into commodities right now. It would be better for me to go into, put money into my own business and start generating some income rather than try to preserve wealth through commodities. Art / collectibles, I've thought about that. That's something that's going to go up with inflation. That's something that has outpaced the S&P. Depending on which art and collectibles you buy, if you buy wine, if you buy fine art, things of that nature, there's actually a way. I have a link in the description below for VinoVest if you do want to look into investing in wine. There are some art sites. Here, let me cut over to the art site. Anyways, here's the art site. I got this from Morning Brew. By the way, if you guys haven't subscribed to Morning Brew, please do that. I'm not actually going to refer you guys to that because I feel like their referral offers aren't that great. What are they, like a mug, a t-shirt? I don't care about that stuff. But anyways, here it is, masterworks.io. It's basically a place where you can go and you can invest in blue chip art. And as you can see, S&P 500 annualized return 9.5%, contemporary art appreciation has been 14%. So that's something to consider as well. Art. Okay, art/collectibles. We said credit card churning. So there are a lot of offers out there that you can get that will give you a much better return than what you can get in the stock market. So a very common offer that you see out there is like one where you have to spend 500 and then you get 200 back. So for example, let's say you get 200 back. So 200 divided by 500. All right. That's a 40% return on your money. And what you could do is you could, if you have bills, you could go put that 500 on your bills, or you could go buy something that you're going to buy anyways. Or most people out there spend $500 on groceries or whatever anyway. So you can get a 40% return on that money. So that is credit card churning. Options. I'm not going to really get too much into options, but it doesn't matter which way the market is going. You can always make a little bit of money in options. All right. You can either short or you can go long. Okay. A good book for trading that I'm looking into right now is Market Wizards. I'm actually trying to learn a little bit more about trading, just because I think that knowing more about trading and also knowing about long-term investing, know a little bit about accounting, it's all a good part of a overall long-term strategy. So that's what I'm looking into. And the last things are alternatives. So leasing equipment / leasing cars and flipping cars. So Toro, basically you can rent your car out on Toro, and you can start basically a little business. Or you could, let's say that you wanted to lease on Uber. So you could go lease on Uber. That's one that you could do as well. I see that some people have taken up the business of basically buying cars, having people sign up for Uber, and then you take a commission basically off of what they earn on Uber. So you have helped them out so that they can make a little bit of money, and then you're helping yourself out by basically running that business on Uber. That's something that runs on autopilot. And flipping cars / items, that is the last thing. So that could be flipping, I don't know, designer shoes or designer whatever, designer bags. It could be flipping old cars, fixing old cars. So these are some options right now. What I'm looking at right now is the real estate option. I'm still putting into mutual funds for the basically for the tax savings, and then I'm putting into some stable coins so that I can put that into the real estate. So anyways, hopefully this helps you guys out. Let me know if you guys want to see a video of all of my reading lists and basically what I listen to during the day, what I am learning about. I think that could be a valuable video, and maybe it'll give you some ideas of what you guys want to go learn about. But as always, there's some links down in the description below. There really is free money down there. I see that some of you guys sign up for it and you guys are surprised, like, hey, there really is free money in the description. So yeah, hopefully it helped. See you guys in the next video.